Good morning, everybody. Welcome to today's 1Mby1M Strategy Roundtable for Entrepreneurs. 1Mby1M, as you know, is the first and only global virtual accelerator for startups. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue, build $1 trillion of global GDP and 10 million jobs. And this is a very long-term vision. It's not something that is going to happen overnight. We are very aware of that. So we are not in it for a sprint. We are very much in it for the marathon. And all of you entrepreneurs, I think the serious ones, realize that entrepreneurship is not a sprint, it's a marathon. So we are here with you shoulder to shoulder. This is the 433rd free 1Mby1M public roundtable that is open to anyone and everyone in any part of the world. We've had over 100,000 people participate. It's been more than 10 years now that we've been doing these mentoring sessions. And the event is being recorded. You will find every single session recording on our YouTube channel, 1M1M Roundtables. If you're live tweeting the show today, please use hashtag 1M1M. And you can join us on Twitter at 1Mby1M and at Stromana. We publish a lot of interesting content through our Twitter channel and through all our social media channels. And these are great learning materials, very inspirational, lots of information, lots of education buried in the various types of case studies, role model interviews, entrepreneur journeys, trend analysis that we do. These are the call-in instructions. This is a roundtable, not a broadcast. So we want you to participate as much as you would like to and as much as you can. So throughout the session, use the public chat. Make sure you set your chat to send to all participants, not to me privately and not to Maureen privately when you're talking about questions and engagement in the program. If you have any technical difficulties, you can contact Maureen separately, privately, but not me. I cannot handle your technical issues while I'm anchoring this show. We are going to start today's session with a conversation with Rebecca Kaden from Union Square Ventures. Rebecca, welcome to the show.
Thank you for having me.
So, Rebecca, Union Square has been around for a while and has been very influential in the entrepreneurship ecosystem. Tell us a bit about where you are today and what is the vision, what is the investment thesis at this point of the game?
Sure. So Union Square was started a little less than 20 years ago. So, it's been around for a little while, but in the history of venture, actually not all that long. And from the beginning, it's really been a thesis-driven venture capital firm. So we take the perspective that rather than have a coverage model where we want to see kind of the whole range of deals and then be opportunistic about which ones we do, we want to, as a partnership, and part of the kind of model of the firm is that we're a small team, small fund. So there are 6 external partners. We have a very flat structure, very kind of communal team-driven process. And so as a partnership, we subscribe to a thesis, which is kind of a set of ideas and beliefs that we all can kind of get behind that has evolved over the course of the firm. And then we very kind of selectively go out and meet entrepreneurs that we think are thinking about similar things that we are in that thesis. And so the firm really started with the thesis behind network effects and the idea that mass equity value is going to come from large networks of engaged users. It evolved to include not only horizontal networks, which led to, Twitter and Etsy and Tumblr and Indeed, but vertical networks focused on financial services and healthcare and education, as well as the infrastructure underlying the networks, which led to investments like MongoDB or Twilio, Cloudflare, as well as the decentralized web, which is kind of our blockchain thesis, and the idea that this centralization that the platforms and networks created needed a counter force that would unlock kind of the next wave of innovation, and that led to a decentralization thesis. Where that all leads us today is what we call Thesis 3.0, and what we noticed is across these platforms, both the horizontal and the vertical, what interested us most was companies that we thought were broadening access, which we're leveraging protocols and platforms to drive up value and down cost and make products and services that were previously only accessible to a small group, thereby accessible to much larger groups. And so that's where we're really focused today. And I think about that a lot across financial services, consumer health and wellness, education, and also kind of a definition of the next generation of fun, of community, and which we kind of group into the wellness trend and includes stuff like retail platforms.
So is this a more recent thesis? And if so, what is the time frame when you started investing with this thesis?
So the way we look at our theses is that they're evolutions. It's not like this, the thesis 1.0 happens in these years and thesis 2.0 happens in these years, and then we move to thesis 3.0. As I think you can tell from, the way I described it, they build on each other. Horizontal platforms lead to vertical, and vertical leads to this broadening access theme across it. So by the time we publish a new thesis, it's really as much of a reflection on where our focus has been in the recent past as where it's going to be. So we published the thesis probably about a year ago, but it reflects the investing trends from significantly before that and builds on those verticals that we had been talking about before thesis 3.0.
Okay. The reason I asked you this question is whether I was going to ask you the next question or not, which is, could you give us some examples of investments that you've made along the lines of the thesis 3.0?
Sure. So there are a whole bunch. One, for example, is Stash. Stash is a mass market financial services platform. It really flips the model of financial services, which has long been built around an AUM structure that really favors the top of the pyramid and says anyone should have access to core financial products that make, their lives healthier in a financial way, but that doesn't work with the model that banking's traditionally been built on. So they built a mobile platform that's extremely simple to use. Education is a big piece of it. There's a digital coach that walks people through it, so making really what might be perceived as kind of difficult to understand, intimidating aspects of financial services much easier to kind of get on board with. They started with an investing product. They moved to savings, to 401k, to custodial, now to core banking, all from your phone. And, almost 80% of their customers, they now have millions of customers, have never invested before. And so it's taking something that used to be for one group and making it to a much broader. So that's one example. Another example is Modern Fertility. Modern Fertility has a female-focused at-home fertility test. So, traditionally, to get core information about your own fertility, you'd have to try to get pregnant for a period of time. You'd have to struggle. You'd go to a doctor. The doctor would prescribe you to a lab. You would take these tests. By this point, it's cost you regularly about $1,500 out of pocket and a significant amount of time and kind of emotional pain often, and it's presented as a problem. And what Modern Fertility said is, this shouldn't be a problem. This is your information, and you should know it up front, and you should be in control of your own information, and you should do it from the comfort of your home and for not a lot of money. And so they launched an at-home test, cost $159. Women can take it anytime they want. And so, again, that's this idea of kind of broadening access at that point to your own health information. So those are two examples, but we have quite a few.
Very good. So a few vital statistics of the fund. Where have you positioned the fund from a fund size point of view, and what size checks do you like to write as a result of that?
Sure. So we invest out of two pools of capital. We have a core fund, which is a $200 million fund that we dedicate largely to Series Seed and Series A. We generally write checks from, call it $1 to $6 or $7 million. We generally lead. These are companies that are early in their life cycles. They often have a product. They have something that is able to get some sense of customer reaction, but they're before product market fit, they're before the inflection points, and they're very specifically aligned with kind of pieces of our thesis. And then we have a $250 million opportunity fund. We really call it an opportunity fund, not a growth fund, because we're doing opportunistic things out of it. Some of that goes to leading rounds in our portfolio at later stages. Some of that goes to leading rounds in companies that we've gotten to know along the way and we feel like are very, very main on main with our thesis, or that we missed in earlier stages and were wrong about. And some of it actually goes to more creative structuring around ways we think we can impact the ecosystem that are aligned with the things that we believe in.
Okay. And what about geography?
So our core geographies are North America and Europe. About a third of the portfolio is in New York. That may have shifted a little, but it's about that. About a third is West Coast and Canada, and about a third is Europe. We also have we have companies in Pittsburgh. We have a pretty broad geography in the U.S. and in Europe. We don't invest outside of those geographies, largely because we're a small team with limited bandwidth. We're all partner-driven, and we have to know the markets well before we jump in.
Sure. Now, if you look at the last, let's say, 12 to 18 months of your deal flow, what are the trends that you're seeing?
In our deal flow?
Yeah.
So I think our deal flow is a little bit different because, as I said, our deal flow really circulates around this thesis. So we less take a coverage model where we're then going to see what's trending in kind of early stage companies these days, and we're going to be very specific around meeting companies that we think are working on these, problems. And so our deal flow has matched pretty closely to our thesis 3.0. We've spent a lot of time in consumer healthcare, financial services, new forms of education, new forms of wellness and retail platforms, but all really focused on this broadening access theme, but that's very purposeful on where we choose to come spend our time.
Yeah, so the reason I'm asking is for a little bit of specifics is, for example, one of the trends that I'm observing right now from where I sit is there's an increased emphasis on lending businesses, lending products of various kinds. And this could be consumer lending. There's a bunch of companies that are doing payday loans kind of equivalent, which is a, shark-infested water, but they're doing a very much cleaner, much more, sophisticated, humane job of that value proposition to ease the cash flow, working capital, home working capital requirements of the, low-income workers. Then we are seeing a lot of small business financing, small business lending kind of products come through. Various companies are taking various different spins of it. So that's just an example of an area which is
okay, so
there's more activity. Yeah.
Yeah, I guess for us, it's less what areas are more activity because we're going to go out and find the areas that have the activity related to our thesis. So we tend not to be as reactive to where people are grouping on certain companies. Lending for us, there was a big burst of lending probably 4 or 5 years ago. We led Lending Club, several others in that, and so we are probably, doing less lending now because it seems like it had a kind of strong time, and some of it now is more kind of reactive to that. But I can talk about some of the sub-themes that we're going after in those categories, if that makes sense. So if you take consumer healthcare, we're really going after
can you hear me?
themes
and
around
can you hear
unbundling
Rebecca? I cannot hear Rebecca
and think
anymore.
about that. And I think there are a lot of people working on that, which we're very excited about, on this idea that there's an opportunity to leverage technology not only to make healthcare more convenient for those who already have access to it, but really to broaden the people who can get it by really driving down the cost of it. And often that means taking apart a complicated system and focusing on much more specific pieces in it.
Rebecca, we cannot hear you.
We're specifically interested and have been spending time with people who are not only outcome-oriented, so they're making that care better, but they're leveraging technology and humans together. So we're less focused on healthcare companies that we think are just going to use machines to solve the problem, or ones that make it easier for you to just find humans, but we think the Centaur model is powerful, that humans have a specific data set that they operate on, and if you can supercharge that data set with technology, you're going to wind up with very powerful systems, and that will impact primary care. So that's an example of a subcategory that we think there's a lot of activity in that we're particularly excited in. Another one's in education. I think we are very focused on the idea that as much as technology has transformed so many things we do, structurally education remains very similar to how it's been for decades. It's largely classroom-based. It's largely textbook-based. Maybe those textbooks have moved online. Maybe you watch some lectures online. But structurally, it hasn't really changed. And so we have been very interested in companies that are going to make it possible for consumers to get much broader range of access to high-quality education and educational tools and do it in an interactive way that might structurally change how we learn throughout the course of our lives. We have some investments in that already, but it's a category where we spend a lot of time. Are you there?
Can you hear me, Rebecca?
Hello?
Can you hear me, guys? You can hear me. Rebecca, can you hear me? I cannot hear me. So there's a... So I'm going to call back in.
Hi. Can you hear me,
Hi.
Rebecca?
Yeah.
You know, I don't know what happened. That was the strangest thing, but for everyone who was on the teleconference call, not an attendee, it went...
So I'm back. I'm back. Can you guys hear me?
Yes.
Yes. I think it's a web problem.
Well,
because I had trouble... Sorry, Rebecca. I'll go back on mute.
All right. Let's not do tech support. Let's go back to, if you can do tech support in the public chat, I'd like to go back to the conversation. So who knows what's happening with the recording, but Rebecca, I imagine you have said a few things that I was not able to hear. So rather than having you repeat that, I'm going to take the conversation forward, because I think some people were able to hear you. Tell me a bit about what is your thought and Union Square's analysis of the unicorn phenomenon. How are you thinking about unicorns?
I guess, what do you mean by that? We want our companies to be as big as possible, and, we want as many billion-dollar companies in our portfolio as can. I guess, what piece of it are you curious about?
Well, yes, I'm sure you want all your companies to be as big as possible, but there's been some very unhealthy models and practices that have developed in the industry around trying to get as big as possible. For example, flushing companies with capital without figuring out a lot of the unit economics or fundamentals has been a practice that is rampant right now in the industry. How do you view all that?
Well, I guess I view it in a couple of different ways. USV tends to be very software focused, and so we in general do not do companies that we think are going to require massive amounts of capital. We tend to trend towards capital efficient companies that are largely software based. And so we have stayed away from that trend and yet seen, very strong growth in much of our portfolio anyway. And so we don't believe it's the only way to grow a company. That being said, we can criticize a lot of things, and yet in certain instances, it looks like it works. And so I think we have to think about, are we criticizing because it's uncomfortable and different, or are we criticizing because it's not creating great companies? Uber raised a lot of money without knowing the unit economics, but it looks like that probably worked. And now it's a very, large dominant business. It'll probably have a very strong IPO. And so, it's not the trend of business growth that we focus on here, but I think we have to be a little careful with saying it's unhealthy if we have to understand really what that means. So I do think it's important to have strong business fundamentals early in unit economics, and it's generally the things that we trend towards. But I do think there are certain categories, a decade ago, it was a lot about structural defensibility and network effects. And the platforms had product defensibility that as they scaled, it was very hard to compete with them because the network grew and it was hard to get user mindshare. With many of the growing companies right now, that's actually not true. There's actually nothing as structurally defensible about the businesses. And so a lot of them take the path of capital defensibility, which is we're going to outraise the competitors and we're going to have a better balance sheet and we're going to outspend our way to being hard to compete with. That is uncomfortable for venture. It's definitely a newer trend, but there are categories in which it's working. And so, I try to admire companies that have achieved scale and understand them, and I think there is a place for it in the overall ecosystem.
So your point is very well taken, that there is a place for a certain kind of companies, a certain style of companies that can defend with capital. I guess there are a couple of points that I want to make that are kind of counterpoints to that. One is we are seeing death by overfunding scenarios by following that strategy, and that we've covered it quite a bit, and I think it's something that we also have to show that we can aim for blitzscaling, but blitzscaling also leaves a lot of cadavers on its wake because it's a very, very high risk strategy. And part of the risk of that strategy is that very often people stop being successful in raising money. So if you don't have sustainability built into your business model and you fail to raise money, death is the natural outcome of that scenario. And you can't succeed if you die along the way. So that's one point.
Sure, many companies die along. I think, I think one of the great things that I really love about entrepreneurship and company building and being an early stage investor is there's definitely no one way to build a company. Success rate is extremely low. I think it's impossible to do that and not be humbled by how hard this is, right? And there's definitely no one way to create success. And I think it's about finding the right model for the business you're building and your goals in building it. There's also no one way to kill a company, right? That, companies get killed by overfunding, companies get killed by underfunding, companies get killed by co-founder problems. There's all kinds of ways that these companies don't work. And so the biggest thing is, can you find the model that is the right fit for the product that you are building and the team that you've assembled and the goals you have in mind, and can you out-execute competitors on the right model for what you're doing?
Right. And so the second point I was going to make is that just like your fund has its comfort zone, because we work with a very large number of entrepreneurs out there, for the vast majority of these entrepreneurs, blitzscaling is not going to work. Because most companies, most businesses don't lend themselves to a blitzscaling strategy, and if they try to practice a blitzscaling strategy, they won't work. So we have kind of done a lot of research to find what reduces the probability of failure. And the counterpoint of it is that what increases the probability of success. And we have come to the same conclusion as you in that capital efficiency and getting to sustainability with, requiring small amounts of capital, paying attention to unit economics and fundamentals is a better way of building businesses for the vast majority of entrepreneurs out there. And it also allows for a lot of entrepreneurs who are working on smaller niche ideas to be successful, because all those other strategies don't apply to the ones who are not necessarily venture fundable, and we support that community of entrepreneurs very heavily as well. So, bootstrapping works better in those kinds of scenarios, and there's a lot of confusion in the market. People are reading the messages coming from, big pulpits like Reid Hoffman talking about blitzscaling is one that is being heard very extensively, and if across the board decide that blitzscaling or nothing, that's not very healthy for the vast majority of entrepreneurs for whom blitzscaling is not going to be an option.
I think that goes back to kind of what I said around finding the right model for you, right? So if you're a venture firm like USV, just by our own model, we can't be focused on the vast majority of entrepreneurs, right? We're trying to be focused on the outliers around that the most unusual model works for, right, which is kind of what you're saying. I'm a big proponent that most businesses, venture doesn't benefit, it hurts. You're selling a huge amount of your business up front. There's a lot of risk and pressure that comes with venture funding. It's not the right model for many, many businesses. Partly because when you take venture funding, depending on the firm that you're taking it from, but a firm like Greylock, Hoffman's firm, or a firm like USV, we are focused on a certain type of exponential growth to meet our model, which isn't the right path for many different companies. So I do think it comes back to narrowing in on what is going to be the right model, both from a capital raising perspective in terms of who you're taking money from and how much, and a scale and a cadence for the exact business that you are building, which is difficult when you're surrounded by a lot of messages, really promoting venture and glorifying it. But it's important as a founder to be able to tune that out and really think about what makes sense for what you in particular are doing.
So where do you see the blitzscaling style of businesses being the most successful? And this is acknowledging the fact that you are not going after that model. You have stated clearly that your firm's thesis is more in the capital efficient, fundamentals-oriented approach, software-driven approach. But where do you see, what pointers do you have for entrepreneurs to look for opportunities where blitzscaling is a good model?
So I guess the first thing I would do is I don't think that's exactly the framework. So blitzscaling refers to extreme exponential growth. We are focused on that. That's not synonymous with high capital intensity.
No, if you read the book that Reid Hoffman has written, he offers extraordinary amounts of capital as one of the strategies of blitzscaling.
It's one way to scale, to grow exponentially fast, but it's not the only way to grow exponentially fast.
That's true. I agree with that. That I agree with.
Right, so we are interested in we don't call it blitzscaling as a term, but in exponential growth and extreme scale. There just are different ways to do that. Capital, high capital raises is one way, but it's not the same thing as the only path towards exponential growth. So when we think about, Twitter's path or Indeed's path, which grew a, multiple $billion-dollar company up to $5 million, or, the firm I was previously at, Zulily, went public for, almost $7 billion off of, less than $100 million raised in a commerce category. It's kind of wildly unheard of. I backed Allbirds, a multiple $billion-dollar valuation, very little money raised relative to that kind of
My
scale.
favorite example is actually Viva, that's raised only $4 million and is doing $650 million worth of revenue. They raised other money along the way, but they didn't really need money. They had great product market fit, and that's really what grew the company.
Yeah, so we like those businesses where we think there is some product defensibility that's going to create scale and momentum outside of capital being the only weapon. That being said, you look at a business like Uber or Lyft or many others, and that wasn't going to be the case there. It's market. I think when you're doing a market by market, high logistics business, oftentimes capital is the weapon, and that's proved to work relatively well in those categories. So I think there's a place for it, just as there is a place for the kind of product defensibility. We just lean in one way versus the other.
So just to elaborate on that, I think the consumer businesses that we have seen really open up a category in a very new way. Uber and Lyft is definitely a good example. Airbnb is a good example. Amazon is a very good example of a company that needed the capital to do what it wanted to do. So these are good examples of companies where I think the blitzscaling model is a reasonable approach to building a business and changing consumer behavior and stuff like that. I guess an interesting question is Slack, for example. Slack was growing very well on its own. Is it necessary to flush a company like Slack with capital?
I think you'd have to. I'm not an investor in Slack, and I think you'd have to know a lot more about their internal operations and their plans for growth to be able to answer it. I don't know. As an investor, I think there's so much going on the inside about use of capital and plans that if someone was talking about one of my companies who had no idea what was going on and said, didn't need this money, I would think their opinion was, only somewhat relative. So I don't know with something like Slack. I mean, I will say Amazon didn't raise a lot of money relative to what, if you equate what Amazon raised then to what it would be today, it's a very small amount of money. They went public very early in comparison today. So actually they are an interesting one that's an e-commerce logistics platform that lends much more towards product defensibility and out executing a network versus out raising if you equate it to what it would have looked like in today's environment.
What is the amount based on, compared to today's, relative to today's environment, what is the total amount of capital that Amazon raised?
I don't have it in front of me. We'd have to look it up. But if you Google it, you'll see it. You'll see it all over.
Yeah, because Amazon, I haven't actually analyzed Amazon. It was a company that had to finance quite a bit of red ink to do what it did, right? Because of all the infrastructure and everything that they had to put in. Anyway, it's actually worth exploring that one. So very interesting conversation. I'm not sure if you're staying for the rest of the program. We have a couple of investor pitches.
I'm unfortunately have to drop off, but I've enjoyed, I always like a good debate about venture and funding environments, and so thank you for having me. It's very fun.
Thank you for coming. Bye-bye, Rebecca.
Bye.
Folks, we're going to switch to the entrepreneur pitch portion of the conversation. Just a few expectation setting points. This is a working session, and you are very welcome to share whatever it is that you're working with in an authentic, candid way. We have no agenda to put you down or anything. It's purely with the intent of helping you. You can disagree with my feedback today. That's fine. It's your venture. You will decide how you want to play it. Just remember one thing, not all businesses can raise money. Not all businesses should raise money. And raising money does not necessarily guarantee success. I guess we're starting with Murali first. Is that correct? Yeah, okay. One second. All right, go on, Murali.
Yeah, hi everyone, can you hear me? This is Murali here.
Yeah. We can hear you fine.
Okay, hi Shramana, hi Maureen. So Shramana, I've been following your articles on the bootstrapping, really like that. So that's when I came across 1Mby1M. So I thought maybe I should join that roundtable and also share what is the journey I'm going through. Yeah. So yeah, I think let me jump right in. So maybe Maureen, you can move to the next slide. One second. Yeah, sorry about that. Hey, I'm call myself a yogi with a technology twist. I'm from Bangalore, India, and my past education has been I've been masters from Illinois University, Champaign, and NIT Warangal graduate. Worked for a long time at Cisco, and a small stint at Siemens. So I'm a yoga teacher myself from Swami Vivekananda Yoga Institute and an IEEE volunteer. So that's briefly about myself. So the company I'm going to pitch today is about Wellnesses. It's all about how do we deliver holistic wellness to an individual by unifying the ancient sciences and the modern technology. That's the main goal here. And our mission is all about, how do we bring the ancient sciences to the foreground to a large scale adoption. Yeah. So, so basically the problem where I start off with is my own personal experience from being a victim of a lifestyle disease during my corporate life, and how I went through that and what happened, and how I eventually became a yoga teacher myself. And I found that a lot of people in the corporate world, they come across these situations in some part of their career. So what I've observed is, of course, there are certain statistics, and I just looked at the US specifically uh, in terms of certain numbers from the some of the sources like America's Health and Mental Health America. How is the lifestyle issues and the the stress related problems are creating the productivity loss at the work, right? So those are some numbers. But if you can switch to the right side of the slide here, and mainly looking at how this onset age, everybody knows is typically the diabetes, hypertension, or spinal issues usually come a little late in the age, but now it's kind of onset age is falling. People as early as 30, in their 30s also they're getting into this. And added to that, I think the healthcare and insurance costs that we know that it is also rising. And so especially because it's a mandatory thing for the corporates to ensure that their employees are covered and their, the well-being is also taken care of. So a lot of corporates are now engaging the employees. Sorry, I'm still on the previous slide. A lot of corporates are engaging the employees in a lot of physical activities, but not really looking at a personalized and a holistic approach because each individual is different. So this is the problem I'm looking at, and I'm really looking at a target segment of corporates and employee wellness as the segment here. And if you look at the end customers, end users, it's all about IT professionals or any corporate employees in general, right? So yeah, we can move to the next slide. Any questions here? Please feel free to, yeah. So the solution or the idea is given that I'm a yoga teacher myself and I've seen this experience, gone through that, how yoga has really helped me come back on track with a lot of these issues. So I know that yoga is a proven science and a lot of people know about it. And but having said that, people still don't feel that it is very accessible and it is flexible enough for them to really adopt this because of a lot of time constraints and accessibility to good teachers, and most of the times these yoga studios and classes people join, but over a period of time they kind of don't stick to that for a long time, and or maybe they feel that there is no individual attention also sometimes. So this is one thing I felt like, why don't we bring yoga at the workplace, and in a way that actually you kind of integrate this into everyone's lifestyle, no matter when they want to do like a small wellness breaks in between, and kind of bring some platform at the workplace. So that's the main idea here. And I've done a little bit of, that is from Yoga Alliance certain numbers where how is it the adoption is actually increasing and the people are spending money on the yoga accessories and things like that. So essentially, I also saw that there is a lot of increasing adoption. It's actually very encouraging to see that. And this is just the US numbers, but I have seen that across the world the numbers are increasing. So that's in general about yoga. So the idea is all about how do we get the yoga into workplace, and more through technology. So this is the core product that we at Wellnesys we have been working on for the last 1.5 years. So the product is all about Yogify. Yogify is an intelligent yoga mat. It's powered by artificial intelligence platform, and it can actually track and also deliver the holistic wellness programs to individuals. So it's sort of like a virtual yoga instructor. So how it works is basically the mat has a preloaded programs designed by various yoga teachers. Mat itself first learns from the teachers, and then the teachers actually deliver this program through the mat. So the connecting part here is the app, the mobile app. It's a companion app to the mat, and this app is actually two-sided. It has a teacher interface as well as student interface. The student is based on their personal goals or limitations. The app actually curates a very custom program, and it curates a schedule and kind of suggests what should be done when and all that. And then with that app being there, they connect to the mat, and the mat guides the user through the program day by day, whenever they want to do, however they want to do. And the teachers on the other side, they can connect to the teachers on the other side, and they can actually follow up with the teachers if they need any special feedback or inputs. And this especially works in a corporate setup environment because although this can be a retail a product by itself, and this is where actually I have some questions maybe I want to ask later. But at this point of time, we see that at a corporate setup, to engage somebody all through the day, and it could be a generalized thing, right? Like not an individual. So they can actually have something in their workplace, and anytime they can just go into this place.
And do you have a product already?
Yeah, we have an MVP, which is going through beta now, and I'll come to that. Actually, there has been a little bit of traction on that front. Yeah.
So I guess the part that I'm uncomfortable about, and I'll put it out there right away, is that I am very turned off by this excessive digital presence in my life, especially the phone being a ubiquitous presence. And I'm trying to draw away from that kind of lifestyle of having this phone being constantly in my life. Yeah. And I have the feeling that people who are interested in yoga are going to have kind of a similar mental state, is that they don't want to have more digital presence when they're trying to do yoga. They want to do yoga and be able to switch off from this constant digital interference in their lives. And you're saying that you want to integrate more digital stuff into this physical activity that is supposed to be mindful and, kind of internal process. You want to insert a whole lot of digital into that. To me, it's a gigantic turnoff.
Okay. Yeah, that's fair enough. But at the same time, this is something we have actually considered in our design as well. You don't need really any of these digital assets as long as you have the mat, and mat doesn't need the internet connectivity. It just helps you. The main process here is to see really how we can help somebody get onto this practice on a regular basis, even with or without teacher, with the help of their own set of tools, right?
Let me tell you what I'm suggesting to you in the validation process. This is why I asked you, do you have a product or not? You should go check what people's reaction is to your concept with your MVP, because if you see, in consumer marketing, there's one very important thing that you have to keep in mind, which is the issue of psychographic. You can only succeed in selling something to somebody if you have a psychographic match. Okay. You will never succeed in selling this product to me because you have a complete psychographic mismatch. I'm going in a completely different direction. I don't want technology in my yoga life or in my exercise life. I want to be technology free. I don't want to have digital interference. So if you have that psychology in the bulk of your target audience, you will not be able to grow a business.
Yeah, Shramana, actually, interestingly, we did validation actually, and
What
actually
validation have you done? Tell me what validation you've done.
So with a lot of people, and actually we have been at CES actually, Consumer Electronics Show, recently.
How many consumers have you validated with? What is the process of validation? With consumer marketing, you have to validate with statistically significant numbers.
Yeah, I mean, like, actually, we are talking about more than thousands, actually. A lot of people who came to the CES show, they were presently, actually, I myself was pleasantly overwhelmed in a way that I didn't expect that will be the reception, that a lot of people really want this in the market.
So that is a segment. CES is full of nerds, basically.
We're talking about the end users only. Like, I got some pre-orders already from US
so,
and
but it's a segment that is very interested in digital.
Correct.
So
That is true.
That segment is a specific segment, and you have to then market to just that segment, basically.
Correct. No, that is the reason why we are looking at very corporate, nerdy kind of segment, not really looking at and actually the reason also is it's a two-sided here model where teachers themselves, they the real problem came for me, like if I have to reach out to a lot more people and help them, and remote yoga therapy is people are using yoga online streaming, right, and getting the therapy from across the world. So in those scenarios, actually this technology is really helping them.
Okay, let's go to your questions.
Yeah, definitely. So, and actually one important thing is like EMF part of it, we have completely turned it off. Like there is no need for, so that is one part actually we kept in mind, that there should not be electromagnetic frequency radiations when you're doing something like yoga, because we are really looking at the holistic wellness here also, right? So we kept that in our design. So in terms of validation, we got an order from a large MNC in US, Silicon Valley.
Large
and
company? What did you say?
Yeah.
Okay. So what are the terms of that order?
No. Right now it's a beta order. We got a paid beta order, and we are working on that actually. So that's one validation we got, and in India we got 3 corporate customers doing beta with us. It's also paid.
And what business model are you arriving at?
So at this point of time, we are bootstrapped, and we are we are going at a B2B. We are keeping the B2C channel open.
That's great.
We're getting as much.
No, B2B is great. B2B is fantastic. We love B2B. But tell me, what is the business model? Like the paid betas, the 4 paid betas that you're doing, what business model do you have for those? What have you arrived with those 4?
So basically, there are 2 more kind of things. One is the unit sales itself, and the second part is the subscription fee on an employee basis. Like how many employees subscribe to this thing. They pay on a monthly basis based on the special programs or whatever, right? So the packages, so wellness packages kind of thing, they're based on the individual requirements. So if we work with the corporate, and the corporate takes a bulk order for their whatever workplaces, and so it's somewhat like a gym equipment, but what we are doing is we are also tying into some subscription way, so that there is a value that we can deliver continuously. It's not like one time we give some equipment and they forget about it. It's not like a cardio machine, right? Like I want to kind of create more and more value with more teachers coming on platform and helping. Yeah.
So what is the unit economics of this? How much are you charging per user per month?
So that is one thing I had that question actually. I wanted to ask you about that. So there are 2 models right now. Our advisors, I mean, we have been talking to some people. So right now the paid beta is like unit sales only. There is no subscription fee right now because they're just trying the beta, right? So the beta unit sale is $269 per unit. Okay.
269.
And yeah.
Per unit.
Per unit with 6 months free subscription for the programs.
And this is the unit is the mat.
Unit is the mat. You're right.
The mat with the app tied into it. Okay.
Exactly. Mat with the app tied into it with the program 6 months.
Okay.
Yeah.
And how many in this paid betas? How many are you getting? How many of these orders is one beat beta?
So it's actually combination of anywhere between 3 to 10.
3 to 10. Okay.
Some places, yeah.
Okay. So what is the question?
So there are some questions actually. We actually wanted to see. One is what is the right kind of business model? Is it good to have more like a obviously corporates are also asking about what kind of unit economics and discounts and all that they can get. So we are trying to see what is the right way of positioning this. Number one, should it be like more less capex and more opex, or a combination of both? This is something we are also trying to figure out.
What is the cost of manufacturing each unit?
So, this is the tricky part of it because the hardware, right? So typically the hardware, when we have very low volumes, the cost is high, but if we are hitting about 10,000 or so, then we can really bring down the cost to even $100. Right now, the cost.
It's going to be a long time before you get to 10,000 units. So what is the current cost?
Current BOM cost is around easily $180, including mat. The mat itself, we are bringing very eco-friendly, high-quality material.
Okay, so that is your floor. You have to charge at least $180 to do these betas. You cannot go below your cost of manufacturing.
Below that, correct. Exactly. Right now, we are not going below. But what I'm saying is, like, that's where our difficult discussions happen, right? Like, they obviously look for something more, less capex and more opex kind of models.
Well, and then but that has a floor. You can't go below your manufacturing cost on capex. That's number one. Number two is on your opex also. There is a cost of goods sold because you have to. These instructors will need to be paid somehow. For you to be able to reliably deliver instructor-led training, you're going to have some kind of a deal with the instructors that they show up to do what they're supposed to do. Otherwise, you're not fulfilling your pact with your customer.
Absolutely. Yeah.
So your pricing will depend. We will have to take all that into account, and I'm a little bit worried that the pricing that you just stated doesn't cover for the COGS on the operating expense side. And if you create a business model that cannot cover your costs, that's the kind of business model investors absolutely hate. And you should too, because you're not going to be able to sustain that.
Yeah, absolutely. So in a long term, we are looking at how do we incentivize the teachers for taking these programs or delivering these programs or creating this content, right? So that's exactly that's where I wanted to kind of look at some ideas here. How do we really look at it and get that kind of because validation, in a way, found that there is a segment very much interested. They want to really kind of get these kind of systems so that they can really look at help their employees, as well as my view is also get to help more teachers to get to that kind of platform.
Validation also includes business model validation. So you're going to have to arrive at a price point and a business model which works for the customer base that you're looking at. So validation is not just that people find the product useful. The validation requires that people find the product useful and are willing to pay the price that you are seeking for it. If people are willing to pay $20 for a product that costs you, $500 to build and operate, that's not a validation. That invalidates your business model. You see what I'm saying?
Yeah. So right now
Okay,
our COGS
I'm
is
going to
not
have
so
to
high.
switch to Harshala's presentation. I think I gave you, some of my thoughts. If I have to work more closely with you, that would, you should hang on. I will explain how we work more closely with entrepreneurs. But you do have some very serious business model issues that you need to work through as part of the validation exercise right away.
Absolutely, yeah, yeah.
Okay, thank you, Murali. Good luck. We have Harshala next. Are you on the call, Harshala?
Yeah, can you hear me?
Yes, we
Hello?
can hear you. Please go ahead.
Yeah, hi. This is Harshala Chavan here from Mumbai, India. And my startup's name is Swapeer. So basically, we are trying to create here a worldwide community of avid readers and students who want books, but they particularly do not have a kind of a budget for avid readers who can constantly buy books, and for students who cannot buy books. Who are constantly looking for second-hand books. So our platform basically is trying to cater to the free flow of print books that is there. So with our platform, you can get second-hand books for free, and this is done by mutually sharing libraries between whoever participants who are there, readers. So what you have to the problem that we are trying to deal with here is that in order to get print books, which is like we did a survey and we found that around 74% of people prefer print books over e-books, both for leisure purposes and for educational purposes. But then if you see the options that we have for buying print books, one is like libraries and bookstores, which are kind of dying right now. And there is a high cost of the print books that is there, because of which people are moving to ebooks, apart from the accessibility that is there. But then most of the ebooks that are being consumed by people is actually the PDFs that are normally available in torrent, or even when you just Google it, you get the PDFs, and because of which there is piracy that is being involved in the book sector. And also there is another problem that we're catering to is that there is no social platform wherein readers can creatively express themselves, while they're reading the book, and actually, express their thoughts. And not just like know, for example, in Goodreads, where you just, know like who is reading what and what you're currently reading, and then there are just forums.
Are you sure? There are lots of literary groups on Facebook.
Yeah. There are a lot of literary groups. I'm talking about a holistic platform which caters to both availability of books, mutual exchange. So I'll tell you like how my solution, allows you. It's kind of a unique social platform as well. Yeah. So ours is mine is a web application. So all you have to do in a web application is that you can add whatever books that you own that you're willing to exchange with people, and then you're supposed to add the wish list of books that you that you want to read, and we will basically match you with people on the basis of price difference of the book and location, and the title of the book, and we will match you with people, and you can just simply chat with them, and you can either meet offline in order to carry off the exchange, or else you can use our delivery services, like our delivery partners, in order to carry out the exchange. So how do we also have a platform for a unique kind of a chat room, wherein you just have to enter like what book you're reading currently, and we connect you instantly with people who are reading exactly the same book. So this is based on the psychology that when we're reading a book, we tend to get like really excited when we find something interesting in that book, and then sometimes we just have no one to speak to, right? Or you have to catch in some friend or something like that. And I wanted to do something regarding this and actually make reading social. And so that is how basically we allow exchange of print books, and we also allow you to express your thoughts as well. And for exchanging part, we have market validation. There is already, I think, in USA itself, there is something called as paperback swap and bookmooch.com. and this is the total number of users and whatever transactions that they've carried out till now. And there are a lot of offline communities throughout the world. In Mumbai, there are itself so many book clubs and especially book exchange clubs as well, which cater to this particular book exchanging aspect.
These are very small numbers from consumer business point of view. 141,000, 106,000. These are very small
Yeah, but
numbers.
this is only in USA. Yeah, but this is only in USA. So
but for
people
US,
that swap in
for
book
US
merge,
markets, extremely small numbers.
yeah, probably because maybe people like don't know about it, but then they just end up buying in Amazon. But then, as far as communities are
I
concerned,
wouldn't call
because
this
they are
market
localized,
validation. This is actually this is a very negative point for what you're trying to say. Is that these have such low numbers?
Okay. Okay, fine. I'll look into how do you think like I should approach the market validation then? I mean, apart from the existing communities and websites that are there.
It sounds
Hello?
like you're trying to do something that doesn't have a lot of traction. So you can build a business and you can bootstrap the business, just don't expect to raise a lot of financing. And we can look at it as a as a possibility of building it as a bootstrap business.
Okay. Okay, for the market size, I have taken like the total number of print books that are sold worldwide. So, in the sense, like how exactly, I mean, how big the book market actually is as my total available market. Out of that, there are 300 print books that are sold by leading online bookstores. I mean, this is the transactions that are carried out in online in order to buy books. So, as far as the share of market is considered, I have considered a total of the used books transaction that is being carried out, the second-hand books, and along with the swap books that is there. So, I'm considering that at least 50 million plus, that is 16.6% of the available market I will be able to capture, considering the amount of swapping and along with the used book transactions that are being carried out.
So this is actually the used book transaction is exactly your competitor. I think there is plenty of used books being sold on Amazon, and I'm sure on other book markets, right? Like Flipkart and so forth. So there is the used book market is a thriving market, absolutely. So that's really what your competition is. What people who want to get rid of their books or want to give out their books to other people, they're done with their books. They want to go to Amazon and sell off their books. And those who want to keep their books, keep their books. I like to keep my books. I don't like to sell off my books. I buy books more selectively, and generally the books I buy I keep. There's a certain number of books that are probably okay to shed, which I'm too lazy to do, but other people may not be as lazy and are more active sellers of used books. So,
actually, my target audience. So my target audience is actually lies with people who are avid readers. So there are people who, people who attend such book swap events are actually the people who read a lot of books and they're not like really attached to them. But then all they're interested in, is like gaining knowledge and, like reading it, and they don't mind like giving it away and taking some other book in return. And another audience basically.
No. Harshala, listen. Your analysis of the market is wrong. Because I think you're undervaluing the tendency of avid readers and their tendency to want to keep their books. Avid readers tend to want to keep their books.
Yeah.
So there is a small sliver of a market, I think, for what you're trying to do, and the social part of it, people wanting to discuss. The equivalent of a literary group is something that is interesting, and in that world are maybe people are interested in swapping books and so on and so forth. So there is probably a small market for it. What is the business model? What are you planning to charge for it? How do you make money? Oh, here we go.
Yeah, so the thing is that we are going to have, so ultimately we have a subscription main model, but then first is that we are going to tie up with libraries, and we want to increase the visibility of libraries that are there by asking them to list their books that are there, that whatever that they own. And this is because most of the books that are available with them, but it's just that we don't know, and we can like maybe just, and since we have like delivery services also, then we will allow them to use our delivery services in order to get the books delivered as well, in order to increase their sales. So tie up with them is one thing. We charge commission on delivery services as well, and I have also added Amazon affiliate links to all the books that are there. So in case if someone is not being able to find a good match, then they can we have a buy button as well, and they can very well click a buy button.
You will have millions of users without, just like that. And getting to millions of users is a very expensive proposition, and I don't think you'll be able to raise money for this anytime soon. So it's a chicken and egg problem with a consumer service like this, where to raise money, you're going to have to show that you have millions of users, and to get to millions of users, you need money. So my suggestion is that you just focus on one value proposition. Don't try to do all these things. Focus on a subscription-based business model. And my suggestion actually is focus on local, on an app that lets you sort by local. That people can chat online about a book that everybody is reading, but in terms of you can facilitate actually people wanting to get together at cafes or at people's houses and forming literary groups and literary associations. I think that is of value, that is of interest around specific styles of reading, because people read different things. I run a literary group. I know a lot about this stuff. The selections that we choose are very different from others, right? We read our first book when we launched this literary group was Dante's Inferno. Right now we're reading Ovid's Metamorphosis. Yeah. This is not the kind of book that average literary groups will read. So I think people have very different spins, and literary groups work best when they're small. 10 people kind of groups are the best sized literary groups. So if you facilitate the forming of literary groups and the workflow of literary groups, and then maybe there's some amount of online connections that you create for people who are reading the same kinds of books, you connect them together. Those are interesting models, but I think you should stick with a pure subscription model. Assume that you're going to have a relatively small community of users. Let's say you have $20 average annual membership fee kind of model per user, and you have 100,000 users. That's a very reasonable business for you to build on a bootstrap basis. Let's just start there. Why don't you build that business, and then we'll worry about other things.
Okay. Are you saying that? No, actually I didn't.
What I'm saying is that you're not going to get to millions of users just because of some of the numbers you've already shown, like paperback swap, book mooch. These are very small numbers, 141,000, 106,000 kinds of numbers. So let me extrapolate from that and say that I assume that you can get to 100,000 users. And the question is, can you get 100,000 users to pay? Because it's one thing to get 100,000 users, it's another thing to get 100,000 paying users. And if you're talking about $20 a year, depends on what geography you're doing it in. That is not, in some cases, it's not non-trivial. In the US, it may be trivial in a certain segment. It may not be trivial elsewhere. So you have to figure out what is your segmentation and so on and so forth. So there's a lot of positioning work that you still need to do to get to a successful business model.
Okay. You just said before about forming literary groups, right?
Yeah.
Small literary groups, like you said something really nice. You said that about forming literary groups within like small patches, about like you said 10-15 people
Yeah.
on the basis of location, localized ones.
On the basis of
Okay.
location, because the trend right now, you have
Yeah,
to pay
I can
attention
do
to
one
the trend
thing.
is that people want to get
Yeah.
together in person. So if the
Yeah.
digital work that you do facilitates physical community building, that is of great value. I think that's what people are looking for, and I think that's where the differentiation lies. So if you can create that,
Yeah.
and this is specifically kind of like a, it's a literary
So
group.
I can. Yeah. Yeah, I can facilitate within my platform for people to form such literary groups, small
That's
localized
right.
ones. And I also wanted to work on productivity of reading, because these days people say that like they don't have time to read, and all. So
People
what I
who
wanted
don't
to
have
do
time, these
was
are
like,
two different psychographics. These are completely different psychographics.
yeah, they are psychopaths.
If
Yeah.
they don't
Yeah,
have
but
time to
then
read, people are not going to join a literary group by any stretch of imagination. So you have to either do. Hold on, listen to me. You have to either cater to people who don't have time to read, in which case your platform is going to be of very little interest to them. Then you have to come up with a different concept. But if you're talking about for catering to you, cater to a population of people which is a smaller population of people who may be busy or whatever, but are enough committed to literature that they want to read. And again, readers of literature are very different from readers of business books. So if you focus on readers of literature, those are the kinds of people who would be interested in forming literary groups because they care enough about literature. So if you go after the community of people who care deeply about literature, they will make time to read. And those are the kinds of people who would be interested in forming small literary groups in their location, in their local area. And that's something that you could facilitate.
Yeah, I was
and that
thinking
may not
like,
need all
maybe
swapping and all that stuff. It may just be, who cares about swapping? I mean, I would buy my books. I don't need to swap books. But you can check again if you get that community together, then you need to ask what that community needs. What kind of facilities, what kind of features does that community need? So try to pull together a group of literature lovers, and then build from there and try to help them put together literary groups and discuss, literature through these chat forums that you're talking about, book-specific chat forums and so on and so forth, and then take it from there.
Okay, so you're suggesting like I make an online platform that allows them to connect offline.
That's right. I think that's actually more interesting. I think that's much more interesting. Okay,
I'll try to think of features. So
and don't worry about millions of users. Try to get enough users who care passionately about literature, and then figure out what are their needs and what are their desires, and then build your product accordingly. And assume that you're going to be building it as a bootstrap company. This is not going to scale.
Yeah, I am currently bootstrapping.
Yeah.
Yeah, I am bootstrapping right now, and I'm thinking of opening a crowdfunding campaign as well for this.
Well, I don't know if that's going to work. I think you should try to get enough users to pay their subscription fee so that you can build a business, not crowdfunding, but build a real business. And for crowdfunding to work, you need a
B2B for that. Yeah, but the thing is, I was thinking of going B2B as per the revenue model. It's like tying up. One is the tying up with libraries, another is like since I have chat. So if you look at something like Facebook Messenger, like they are using chatbots, in order to allow businesses, to what we say, promote whatever.
So I don't see the case for businesses to want to pay for literary groups. I just don't see why businesses would want to pay for literary groups.
No, they won't pay for literary groups. They will pay for in order to carry out book launches. For example, just like Goodreads. So in Goodreads, authors and publishers, they basically pay in order to promote their books, do book launches, and to.
But to do that, you're going to have to first have to have a community. In the meantime, it's a bootstrap business. Harshala, a bootstrap business needs to sustain itself. Once you have, let's say, 100,000 users, then publishers would be interested in paying you to do book launches. Until you have a community, you have nothing to sell to publishers. So how do you build this community? How do you sustain yourself while you build this community? You're going to have to charge subscription. That's the bottom line.
Okay. But I'm not sure if they'll pay for subscription as such for this.
Then you don't have a business.
Because I might have. Yeah.
Then you don't have a business.
Okay, so I was thinking of, gamifying this thing by, introducing credit system and all. For example,
you can do whatever you want. Somebody has to pay for it. If you can't find a business model, you can't build a company. That's the bottom line. All right, we need to move on.
Yeah, sure.
Okay, folks, if you like what we're doing here, please refer other serious entrepreneurs into 1 million by 1 million. And the word serious is really important because we are interested in working with people who are willing to do the heavy lifting that is required to build a business. So resources-wise, you can use 1 million by 1 million as much as you want to help in your entrepreneur journey. The resources are all at 1Mby1M.com. There's a blog. You can read the blog. You'll learn a lot. You can read the Entrepreneur Journeys book series. You'll learn a lot. Everything is on Amazon. These roundtables, you will learn a lot. We have had hundreds of thousands of users here. And then there's the full acceleration program. That's a $1,000 annual membership fee program. You can use our self-assessment to evaluate where your business is. If you run into methodology gaps, go use 1M Basic and plug your methodology gaps. And dig around on the website in general to figure out what each program offers and if it is for you. There's a complete description of the curriculum, which is a case studies and video lectures-based curriculum. Our methodology is lean, capital efficient, bootstrap startups. Bootstrap first, raise money later is the mantra that we follow. The next free public roundtables are on March 7th, 14th, 20th, and 28th. And then we also have 2 in-person rendezvous in Cafe Baroni in Menlo Park on March 6th and March 20th. And that is all for today. If you have questions about the program, Irina Patterson will answer your questions. And that's pretty much it. Let's see if there's anybody who has any other questions, including Harshala. If you have any other questions, I'll answer before I adjourn, and then we will adjourn the session.
Questions? Okay. Can I ask you, offline, if you can share your email ID or something like that?
I will not answer any further questions via email unless you're part of the program. You're welcome to join the program. If you want to join the program, I will answer your questions. But if you're not in the program, then I can't advise you further.
Oh, okay. For now, I'm not having any questions.
Okay, good luck. I love the whole idea of fostering a community of people who are passionate about literature, because I'm passionate about literature and I run a literary group and I swim in the world of people who love literature. But I do know that it is a small community of people. It's not millions and millions of people. It's a relatively small community of people. So you have to keep that in mind as you design whatever you want to design. Okay?
So I have one question. How do you run your own literary groups? Do you do book reading sessions, or do you guys just come and discuss about book? You guys decide a book and then you guys just come together and
we read one book a month. and we get together. We rotate houses. We have a literary salon each month, which one of us hosts. There are 5 houses in which we host our salons, and we rotate. And each book is discussed in a full salon, and somebody from the group leads each project and does the research and provides the notes and pointers and guidance on each of the discussions, salon discussions, and when during the salon also we have a leader for the salon each time.
Okay, so you guys basically do it like per book basis and you guys don't stick to any genre and theme that is there.
What genre or theme? We read serious literature, so genre of theme or theme.
Okay,
what do you mean? We're not reading adult literature, or we'll be not reading teen literature, or what do you mean by genre or theme? We sometimes read classics. We read literature that is world-class literature.
Okay, so you guys go for the classics and all.
Not necessarily.
So you guys have similar mindsets. I mean,
we read classics. We read, works by, let's say Nobel laureates or people whose work is considered to be world-class literature.
Okay, so all of you guys are like having similar mindsets and similar tastes of books. It's not like someone. Is it that you guys allow, or is it like most of the people who are there in your group are just having like exact or at least similar taste of the books or choices of the books?
Well, it's a diverse group and it's an international group. We are, we come from very different cultures. So we actually read world literature and we draw in, based on our backgrounds, our cultural backgrounds, we draw from one another's cultural backgrounds. So we have French people, we have a Polish-Armenian person, we have a Chinese person, we have me who's Indian, we have Jewish people, we have a Persian lady, so we have Italians. So we have a very diverse set of, but everybody is highly educated. So it's a very highly educated group of people who process, it's a very high intellectual level group. So So that's, has its own dynamics. I think in general, people have to come to terms with some sort of an organizing principle for a book club or a literary group to work. So you have to see what kinds of literary groups people are trying to put together, what kinds of things they want to read, and people may want to do a literary group around detective novels, let's say. People are passionate about detective novels. Maybe they want to do something around detective novels. So that speaks to what you said about genre. Our focus has been more about, really high-quality literature. So it's literary and, what we care about.
Okay. And I had one more question about your choice of books. How do you read from ebooks? Have you bought Amazon Kindle or any ebook reader app or something like that?
People read on different platforms, including Audible. We actually listen to, my husband and I are both in the literary group, and we tend to listen a lot to audiobooks.
Okay, so you're shifting to audiobooks.
It depends.
Or
sometimes.
Is it that
some people read on Kindle, some people read on paper books, some people listen to books on audio. All of those are acceptable formats.
Okay, you don't have any particular choice of format as such. Okay, and so when you're reading via ebooks, do you feel like it's kind of a solitary experience? For example,
I don't read on ebooks. As I told you earlier in this program, that I'm trying to move away from digital experiences and to more physical experiences. So I don't read on ebooks. I spend too much time online anyway, so I'm really trying to draw away from online experiences.
Okay. So now it's like audio and print.
Audio and print, yeah. I mean,
It's
I read a lot of notes and stuff online because each project we do it quite deeply. So there's a lot of research and a lot of essays, reading essays, interviews, and stuff like that. So there's each project has a whole world of online experience around it.
Mm-hmm. So what do you think about this one particular tendency that is there that, when we read, for example, especially with non-fictions, we read a lot and we don't really remember each and everything, or at least we very next day we, forget most of the things that we had read. And even if we create notes or something, whatever we are learning, it's like
This is
being
not my
restricted to
experience
it.
at all. I have a near photographic memory, so if it's worth remembering, I'll remember. If it's worth flushing, I will flush it down. So I don't relate with what you're saying at all.
Okay, that's amazing. Okay.
But again, non-fiction reading groups are going to be different. Reading groups are going to be different. There are some people who like to read self-help books. Maybe there are groups who want to read self-help groups together. There are people who want to read different kinds of books. I mean, I'm sure you'll find lots of different permutations of what people want to read. And I think one thing that you could take away from what I explained to you about our literary group is there is substantial amount of notes involved per book. So, there's studying of related interviews by the author, the background of the author, and so forth. If you can collect all that, when a book is part of any literary group's discussion, then you can provide all the supporting materials, notes, and research on it to help that group kind of hit the ground running. These are possibilities.
Yes. So do they actually go through those notes and, read them? Because considering, they have to read the book also, and then they have to read the notes and stuff as well. Do they actively do it?
Yeah, well, I'm telling you, our group is a very serious, very high intellectual capacity group, so very rigorous, and that's not usual at all. I mean, I don't think you'll find that many groups that have that level of rigor built into them. Most book clubs operate on a much more superficial level.
Yeah, that is there. And also I wanted to ask is about how many times do you guys meet? Once a month, you said, right?
Once a month, yeah.
Once a month and one whole month for one book. Okay.
Usually.
Okay, 1 month. Okay.
And there are other, associated stuff, like we are doing Ovid's Metamorphosis right now, and Berkeley Repertory Theater, which is a local theater company that is doing a play, Mary Zimmerman's Metamorphosis, based on Ovid's poem. We're going to see that this Sunday as a group. So there are other experiences that we are building on top of that, which are interesting experiences. So here's what I will leave you with, Harshala. If you decide that you want to join the program, I can actually help you design something that is meaningful and interesting from an app point of view that leverages what we have built and what we have learned from running our literary group, that you can work some of that into your app and build something that would be interesting.
Yeah, sure. I'll surely think about. I'll surely think about that. I have just one last question. Do you have that tendency while reading book, when you come across a sentence or something, and do you have this tendency to speak about it with your friends, with your in your literary group that is there?
Yeah, we read passages that we particularly liked, and that's particularly poetic or interesting or beautifully written. We also do quite a bit of poetry in our group. So yeah, I mean, I think high quality experiences within a work that is, whether it's lines or passages, we often read those out aloud and discuss them. Yes.
Yeah, that you do when you are meeting, but I'm saying while reading the book, when you are reading the book, do you maybe if you guys are connected on WhatsApp or some other social platform, do you immediately post a picture of that particular line or paragraph that is there to your?
No, we do. We save the discussions. We have notes. We use Google. We use Google Doc to collect all the notes. And there, if there are pointers that people are suggesting, read this portion or that portion. Like in Ovid's Metamorphosis, we have the people who are leading the project. They're Italians, and one of them went to see his friend who's a classics professor, Latin professor in Italy, and based on that discussion, he has outlined, a set of different passages from Ovid. From Metamorphosis, which he has recommended as the ones to focus on. So there's a lot of, the lead takes a lot of initiative in figuring out what's the best experience for that book.
Oh, okay. So the lead is the one who decides the experience. Okay.
But, we all weigh in. If there are notes, each of us have some pointers like do this, and it's like, here's something that is interesting, you check that out. So this Google Doc, everybody has access to per project, and we insert our own perspectives into the Google Doc as and when, not everybody does, but if somebody has something that they want to bring to attention, they do.
Okay.
Okay, I have to go.
Okay,
this is...
yeah, thank you so much. You gave some
You're very welcome.
Right.
What you're doing is obviously something that I'm very passionate about and have a lot of experience in, which is why I engaged with you at this deeper level, but I hope you found that helpful.
Yes, it was definitely helpful. Thank you so much, ma'am.
You're very welcome. Bye-bye, everybody. We'll see you next time.
Yeah, bye.